I'm guessing Paul has his mouth full at the moment, but as a relatively new person, all of the above, John, is what I've experienced so far in my first couple of sessions here.
Sure. All right, well, I'm going to refill my water. I'll be right back.
Is that better? Can you guys hear me now? Yep. Okay. Interesting, because you guys couldn't hear me earlier.
Yeah, I can hear you now.
My mic changes all the time. It's just really weird. Going back and forth to different Zoom or Microsoft Teams or Google, and it just seems like it changes my mic all the time without me knowing about it. I'll wait till. All right, John. Your question, my mic was off. Yes to every single one of those things you just said. Yes, these are my deals. Yes, these are community member deals. Yes, you send them to me on if you want me to go over your deal. Send them to me on Sunday night, fully redacted. So names, email addresses, all that sort of stuff, because they are recorded. So we got to make sure we keep confidentiality on there. And yeah, P&Ls, balance sheets, tax returns, just kind of whatever we have, we'll go through it.
Okay. I mean, so the last couple tax returns I got were 116 pages.
Yeah, that's a crazy return. But
certain
no, I mean, if you
sections
got
that
one
we-
that's 116 pages long, just copy and paste what do you think is important to show.
yeah, I don't know.
I can scroll through a bunch of stuff too. So
Uh-huh. What's the best way to redact things?
Paul just put something out there today, didn't you, Paul?
Yeah, I found a little free software tool that you can use to just basically drag a little window over a portion of a PDF, and it'll redact that from the PDF, and then you can just save it again and send it on. So it's in the chat.
It's in the chat, John. He just put that out there today.
In the chat. Not in this chat. Some other chat in the school community area.
In the school community on the front page. In the community chat in school. All right.
Oh, yeah.
Maybe we can go over your stuff today, because
cool. Thanks, Paul.
I think Heidi sent me a couple. And she's not here, so we'll go over yours. Does that work? Okay, so we just got a short and sweet profit and loss. Okay, cool. This will be good. All right, I'm back. All right. There it is. That it? Let me
Yeah, this looks like mine that I just sent you, Paul.
Yeah.
So this is
okay. So give us, Jeff. You get more than this.
Yeah. So this is an update. I think it was either last week's session or the week before. We had discussed a PT clinic that was for sale, and it was basically an individual owner with some staff, and then he was also offering up the real estate as a separate transaction. And from that conversation, we kind of said, hey. Obviously, the real estate is of value. Maybe we potentially come in with a low offer for both of them. But then one of the open questions we wanted to see was, because there was declining revenues over the last 2 to 3 years, we wanted to see what the first half of this year looked like from a performance standpoint. This is what they sent me back today from that. So one, we got a little bit of detail on the balance sheet, which we didn't have before, and then also a little bit on performance so far this year. After just scanning it, I'd say the couple of the things that jumped out at me, one was their current run rate for the first 4 months. This is through April. For the first 4 months was about 104, 105,000. Now, I don't know if their revenue is seasonal in any way or has some sort of peak, but if you start to extrapolate that, their business was basically about 315,000 on average is what they're kind of trending towards for the year, which would be down from 360 or so that they had last year. So now you're seeing a 3-year kind of negative trend. And I think we hypothesized that this was basically a guy who's just trying to get to retirement. He's kind of packing it in, which we're seeing continued decline. I didn't get an answer yet on why they continued decline, but at least we have some numbers to look at. The other part that I saw within this, which was interesting, is I think if you scrolled back up, probably, Paul, yeah, some of the things that he's got kind of on the balance sheet. One, he's got a couple of really nice cars that he's rolling in through the business. A BMW M4 Competition is a $100,000 car or more that he's basically running through. And then I think he has some other existing loans and debt on the business too that I thought was, oh, that's an interesting one. So again, I just took a real cursory look. I literally got it late this afternoon, so I'm still kind of piecing through it a bit.
Okay, we'll go over this real quick. So when you guys are getting profit loss statements, I want you to get them both. You guys see up here, this is cash basis. Okay, I want you to get cash basis. I want you to get accrual basis too. Okay, for 2 reasons. One, cash is probably going to mirror up to the tax return. Most likely the tax return will be cash basis. Probably 95% of businesses are cash basis taxpayers. Okay. So I want to be able to mirror this because it should be within spitting distance of the tax return. But the accrual basis is going to take out all abnormalities and seasonality and oh shit, look, I recorded rent on April 1st and April 30th. So it's got 2 months worth of rent in April and none in May. So accrual is going to take that out or should take that out if they're accounting for it properly. So it'll take out weird shit like that. And mostly what it will take out is cash basis revenue is deposits. Everybody understand that? Accrual basis is when I bill it. So I did a floor job and I just finished today on June 22nd. That's going to show up on June's books, accrual basis. But from a cash basis, they don't pay me till July 15th. So it's going to show up on July's P&L as revenue because that's when I deposit it. Okay, so you could have massive swings in revenue from one month to the other in cash basis. So it could be very hard to analyze. Year over year, not so much. But when you're looking at a quarter or even a month, it could be drastically off. So on the balance sheet, accrual only. I don't care about cash basis on balance sheet, but when you're looking at profit and loss, do get cash basis and accrual basis, if that makes sense. Any questions on that? Okay. All right. So let's just go through some stuff here. You guys got to read these and figure out what this is. What do you guys think billing services is here? There are physical therapy place. Billing service. That could be some type of third-party medical billing situation that's billing Medicare, Medicaid, could be billing insurance companies, things like that. I have a feeling that's what that is.
What is this business? Is it a doctor's
Physical-
office or
Physical therapy.
physical therapy? Okay.
And as Jeff was alluding to earlier, me and Jeff already talked about this a few days ago. We've got declining sales for about 4 straight years. So I asked him to get interim finances and see where we are. And it looks like it's actually decreasing still in 2026. Officer professional fees. I'm just reading in here. Condo association fees, rent.
Well, I guess my question is, if you're looking at a business that's showing a steady revenue decline, I guess that doesn't necessarily mean that you throw it out. It just means that you have to get a really strong understanding of why it's going down, and is that something you as the new owner feel you can fix because you have unique skills to be able to turn that trend around? Is that what we're trying to do
I'm gonna
here?
stop right there and talk about that. I'm gonna go 2 different directions here. Some of you guys have heard me say this. If you have, apologize. If you haven't, this is new information. Never ever, and I will repeat that again, never ever think that you are smarter than the current business owner.
Mm.
So we don't buy on hope and prayers. Okay. Oh my, I've run a physical therapy office before. I can turn this around. Well, that's great. But you don't value the company based off of that.
Mhm.
Right? You base it off of historical trends, and current trends and historical averages, right? So this company, in my opinion, is worth 0, and you might be able to buy it for 0, Jeff.
Mhm.
So probably what I would offer him here, it still makes a little bit of money. What was the seller's discretionary earnings last year?
It was like 120-ish, something like that.
Okay, 120-ish. Okay. And with your wife going to run this?
Yeah, she's in PT.
Okay, so in essence, she's buying herself a job.
Mhm.
Okay, being it so low. But what I think, if you guys want to buy this, I would literally offer them like $10 with earnouts, because nobody's going to buy this.
Yeah, I know the big piece we were talking about, because the real estate was the interesting part of this, because they own the office, and we started saying, hey, the value of the office might be worth, and that's all that we offer for, and say, hey, we'll take it off your hands. Interestingly enough, too, the broker had expressed that the owner was, if we bought the real estate, was very motivated to significantly reduce the cost of the business. So interesting story. I haven't talked any deeper with him yet, but I agree. I think there's
Well,
here.
let's talk about that for a second.
This is what I was curious about.
So they got rent on here. God dang it, come on. They got 4 months of rent of 10 grand. So it's $2,500 a month. 2,500. So that's 30,000. How much do they say the building's worth?
It's for sale for 400. And by the way, it's condos within an existing building. So it's not the
right. So it's like the 3rd floor.
Yeah.
Of an existing building, right? So that's what the condo association fees are.
Mhm.
So that's management and the lobby and all that sort of stuff. That's 5,000. So he owns 1 floor of that building. So you guys know how to do a cap rate?
Yeah, I have not looked for detail at it as of yet.
Yeah. So I mean, I just threw in rent. I don't know what else is in there. Is that a net? Is that a triple net? Is there
Mhm.
other expenses? Does he have a different LLC for the building or for the condo?
Yeah, it's one of the open
He-
questions.
He's got other expenses associated with, I don't know, right? So I'm just saying this is net, right? So if that's a net number of 30,000, and let's say it's a 7% cap rate, so divided by 0.07, that's worth $428,000. As long as that's what you are netting,
Mhm.
right? So if there's taxes and insurance and maintenance and all this sort of stuff associated with that, that's on another set of P&Ls, then it's not worth 428.
Yep.
Okay. Um, how many square feet is it?
2,500. It's 5 individual units that they combined into one.
Is that the entire floor?
I don't know for sure. It's at least half of the floor.
Okay. 2,500. Yeah. I think it's worth it. I mean, you might be able to just buy both of them for like 300 grand,
Mhm.
something like that combined. Because his company's worth zero.
Yeah, that's what as I'm starting to look more and more. It's the numbers are getting worse and worse.
Yeah. So, and then you could, okay, we'll throw some earnouts on it. Okay. We'll say Steve's the seller. Steve the seller, you made 125 last year. It's been declining for 5 straight years. I tell you, if I get it up to 250,000 in income, I'll give you some money.
Mhm.
Something like that. Just make it very far out that it'd be hard to reach. And if you reach it, you're okay with paying them 20 grand
Mhm.
or something like that. But I'm not so sure that that building's worth 425 grand.
Yeah.
Because what's a loan of 425? Let me go over here. Just say you put 10% down. Come on. In the loan calc here. SBA is 25. Is that right? I think that's right.
You know, payment frequency monthly, right?
Yeah, I was wondering why that came out so high. I'm like, damn, that kind of stuff. Damn, that didn't make sense. So there,
Too.
$2,800. So that's close to what you're paying. And that rent's in there again, but the only thing I don't know is there a separate set of P&Ls for the
Mhm.
building? I'm assuming the building's owned in a separate LLC, which it should be,
Yeah.
right? That's 2 transactions and 2 legal entities. So if you look over there and you see $20,000 or $30,000 worth of expenses, which I couldn't see them, they'd be that high. I mean, taxes and insurance gotta be 3. You already got the condo dues on there. What was that, 5? The condo's dues was 5 through, so that's 15. 40, that's another 3% would be 12. Man, I wouldn't pay 400 for the building. I just don't see that makes sense. I don't think you can go more than 300 grand on both of them combined. Because best case scenario is he's just going to sell the building. That's best case scenario, and he's going to get 400 grand for it. I don't know. Anybody got any questions on this?
Yeah. I've only had like 2 or 3 conversations with sellers at this point. It's not a conversation that's comfortable for me yet. Jeff, have you been How many conversations have you had with this seller and with sellers in general?
I have not spoken to this particular seller as of yet. It's only been through the broker. The next conversation, I basically got the initial documents with the last several years of performance. This was the second kind of document they'd sent over outside of the SIM. And then I'd sent back to the broker. I kept it light, but 5 additional questions. And I said, hey, here's just a couple thematic things I need to know. And if I can get answers to those, then let's have a conversation with the seller. And we talk through that. So that's kind of where we're at the moment, just waiting on the responses of a couple of those things. Like you, though, John, very new to this, to the acquisition side of all of this. So it's only been a few, and we're just kind of getting up to speed on this.
Yeah. So to everybody listening, how do you guys get comfortable talking to sellers?
I think you just have to keep having
Just do it.
conversations with sellers. I don't think
You just
there's
do
any
it.
way to. You can't-
Even with ones you're not interested in, right?
Yeah.
Go. That's how you're going to get comfortable, right? And that's how you get comfortable reading financial statements. You don't, you just don't find one and you're ready to go. You start reading as many as you can. That's why we're having this every week, right? So I'm going to put up different stuff and try to show you different stuff each week.
Hey, one of the Paul, one of the things, I think if you scroll back up on the balance sheet, I just wanted to start to get some of your input. So when you see obviously things like fixed assets, vehicles, and then a little bit longer or further down, you have long-term liabilities. And then there was a big number, it's EDIL. That's like a COVID loan, was it not?
Due from shareholder. So he lent that's an accounts receivable from the shareholder. So the company lent him money. Let's go through this stuff. Okay. I know this has been recorded. Leasehold improvements. Okay. This guy put in some new walls and some new cubicles and some new lighting, whatever, and painted. Those are leasehold improvements. They should probably be amortized over the life of the lease. Just write them off. Just expense them. Unless you don't need the write-offs. Just, man, I'm all about minimizing your current tax liabilities. Just be super aggressive. They're not going to throw you in jail. You're not going to get audited for it. Right? And it's such a small number, they won't care. Just be aggressive on your tax stuff. So he's amortizing this over, I don't know how many years. Well, he's already amortized all of it. Right? So there's the asset, the actual expense that you put on the balance sheet. And here it is, fully depreciated, negative 81. But just expense stuff. Be aggressive. And if you find a CPA that doesn't like to do that stuff, then move on. Due from other assets. That's weird.
I have a
Due
question.
from office condo real estate taxes. So that's a receivable. Did they get some type of a tax abatement or something? That's very weird. Yeah, but by the way, when you buy the building, make sure you get that asset. That would have to be in your LOI. Not this. You wouldn't get that, but you would ask for this. Credit card. So what does that mean? What can you glean from that? You guys got to read into stuff as you're reading financial statements. By the way, what do I like best, P&Ls or balance sheets? Balance sheets. What does that tell you right there about the state of the business and the state of his financial personal world?
55,000 outstanding
Yeah, that's a shitload.
out of the 104 so far, correct?
Well, that's an outstanding payable. So that's his current credit card balance. So that means his business does not make enough to support his lifestyle. Those, I guarantee there are a bunch of personal expenses on there. But you could assume that it's not. Well, again, the business can't support itself if you're carrying a $55,000 credit card debt. It does 300,000 a year, just 25,000 a month in revenue. So your credit card expense based off of $25,000 a month in revenue should be less than $3,000 or $4,000, right? I mean, your payroll's not on there, your rent's not on there. That's just miscellaneous shit, like going to buy office supplies and maybe a new computer or your chair broke. You know, that's what's on that credit card, right? And it's got a $55,000 balance. So I bring that up because that's leverage. This person is hurting. They're in a bad situation. Right?
So what does that conversation sound like between you and the seller? How do you have that conversation without it sounding adversarial or predatory?
You don't bring that up. You know that.
Uh-huh.
Yep. So you can't fall in love with something. You make an offer based off of the information you have at hand. And if there's a little bit of wiggle room, okay, you offer 300,000 and you're okay to go to 350, then that's fine. That's the top and you don't go over it. And this deal is in a bad situation. I mean, in a year, he closes the business and he gets foreclosed on the building, if you ask me, within 12 months. So I don't think you're actually throwing that in his face. Hey, Steve, man, I know you're in bad shape. You have $55,000 of credit card face and shove it in his face. No, we don't do
Right.
that. It's
Yeah,
just
no.
we know that information,
Uh-huh.
and therefore we're willing to walk away because we think it's going to come back to us.
Uh-huh.
Right. And you would even say, Jeff, maybe even say like, hey, this is as much as I can go. I'm still interested, but you're on a declining, you've had declining sales for the last 4 years. You can't call me in 6 months when you're doing 10,000 a month because I won't buy it. I got to get it now so I can turn it around before we go bankrupt. Right. What else is in here? He's got his car loans on here. Loan at Citibank. I don't know what that is. His idle loan.
Can you
That
talk a little more about
BMW
that is?
competition, he bought that last year, right? It was a 2024?
He bought what when?
The BMW competition at the M4.
Oh, I don't know.
I think it was a 23 model year, and then he has the
The
one other car.
23.
23.
So it could be 3 years old.
He was living large then.
Man, you have to make sacrifices, man. You have to make sacrifices. You're all in on this shit. I mean, the dude's making $150,000 a year and he bought a fucking $100,000 car.
Yeah.
I make $1 million a year and I don't buy $100,000 cars. In fact, I'm getting ready to buy my wife a car. It'll be a 2023 and we're buying it for $33,000. One, I live frugal because I want to spend money on other things. And then secondly, it's just a complete waste of freaking money. And here's somebody that makes $150,000 a year and think they're entitled. They're entitled to buy a $100,000 car. And he's wondered why he's in trouble. Sacrifice your lifestyle. This is a long-term play. You can buy that $100,000 BMW in 6 years when you're making $800,000 a year. But for right now, you're trying to survive and grow your business and do what? Save money so you can buy business number 2. You guys heard the story. I started with 45 grand down payment. I sold my car and I sold my house I took no vacations for 2 years and I didn't eat out for 2 years. That's the sacrifice I made. Are you guys willing to do the same thing? Or do you still need your country club membership and your $100,000 car? Right? I have conversations with people all the time. Oh, I don't have any money. Yeah, you do. You're just not willing to do what it takes to get that money. Right? I sold my Lexus for 25 grand. It was paid off and I bought a $5,000 truck. So I took that 20,000, that was part of my down payment. Sold a $450,000 house and bought a $225,000 house. And it had a little bit of equity in there. That was also going towards the down payment. Plus, it set me up to minimize my expenses just in case there was a downturn right after we bought the company or that we wanted to use money. Right? So me and my brother took out $10,000 a month out of that business for the longest time, even though we could take out a shitload more. We would just get savings, and then what would we do? We'd buy another business. We'd buy a piece of real estate. We'd invest in this deal over here. We're trying to accumulate generational wealth. We're not trying to accumulate trinkets and toys. That isn't what we're doing here. At least not what I'm doing. Okay, let's go back down to this PPP loan. Yeah, this guy's in a bad situation, man. So he's got to pay that back. That's an EIDL loan. It's not a PPP. A PPP was just money you can have. An EIDL is an economic disaster injury loan. He's got to pay that back over the next 30 years. So he's got $139,000 in debt there. He's got a loan from Citibank. I'm assuming that's one of the BMWs, 27. So he's at 200. He's got credit card debt of 55. He has $250,000 in debt. I hope his building's paid off.
Yeah, that's one of the next open questions we want to understand.
If it's in another LLC.
This guy's a bad situation. All right. Distribution, capital stock, undistributed income. I don't know where retained, one of these should be retained earnings. I don't know which one that is. Net income is current year. So that should match the P&L. Where's the P&L? Isn't that crazy? Yeah. So see, remember the balance sheet is an historical snapshot of the business existence. So that's current year net income. One of these numbers should be historical income from the day they opened. Shareholders, undistributed distribution, current years, distribution, life insurance. Man, maybe this undistributed income is retained earnings is 70. I've never seen that terminology before. So these are all negative numbers, by the way, if you want to get into taxes. You know, if he sells his company, even if he sells it for $1, he's got to clean this balance sheet up. And his equity is $119,000. You know how to get that to zero? It's a negative number, meaning it has to be a positive number. He's going to have a write up and show as income $119,000 to close his business. He's going to owe taxes. If he sold his company for $0, he'd owe taxes on $119,000. He's got to take equity at $0. Man, we're looking into this. This is a bad situation. I feel sorry for this person. It's a bad situation, which means you might just want to walk away with it because the situation is so screwed up that you may not even want to mess with it. Hmm.
So Jeff, you're still waiting for a response on some undelivered materials?
Yeah, we had some general questions. One was around the real estate, as it's a separate listing. So I wanted to get a lot more detail on the real estate. Wanted to get some commentary on the declining revenues. We wanted to see this, what we're showing today. I think I had one or two other questions out there as well. According to the broker, he did have a death of a family member or a major medical thing last week. So they've been kind of not pushing to get answers. But I said, hey, the conversation doesn't go any further until I can at least get some of these questions answered. And then if it's still of interest, then we'll talk a little bit more.
And
Now,
you
the
said
good thing
we.
about these
Who's
three
we?
things here, those don't have to be paid off when he sells the company. He can just take those over personal. I'm assuming he's a personal guarantee on all that stuff.
Yeah, that was one of my questions. Is that can basically not transfer over in the sale,
Oh, it
correct?
definitely won't transfer over, but I don't think it has to be paid off at closing either.
Okay.
Because the idol, that it was lent to the company, but it had a personal guarantee. So I don't think it's going to be forced into paying that to zero if you sell your company.
Mhm.
And same thing with the cars, because there's still that asset of the car. So I don't think those three things got to get paid off. Interesting. So this is typical. There's so much weird shit that goes through, even on bigger deals, right? Because you run through so many personal expenses. You got 2 personal cars on here. You got an idle loan on here. He's not making money, declining sales. It's like, how do you value this stuff?
Mhm.
It's tough. And that's one of the reasons why you're in my community, so I can help you with this stuff, because this is very hard to navigate. Right? Very hard to navigate. And under no circumstance will you try to navigate something like this by yourself.
Mhm.
Right?
Yep. This is exactly what I've been looking at for the last 90 days. And it's exactly why I'm here.
Well,
Because
you're going crazy then, John.
yeah, I'm
If this is
swimming,
what you're looking at.
swimming in confusion.
Well, shit.
Yeah, I was wondering a little bit, like as I thought about this more, because I was going down the same path as you, Paul. Is even, and again, I'm still learning a lot of this stuff, but there was like, as I looked at this document when I got it today, I was like, oh, red flag, red flag, red flag. And part of me almost wonders, is there like, I'm trying to think of the creative. It's not obviously acquiring a business, but is there a scenario where you get if the real estate's worth it? I think that's a fair question, first of all. But if the real estate's worth it, can you get it at an extreme discount? You get the business and you just close down the business and sell off the assets.
Yeah.
And does that then you got essentially the property that has value to it that can either be rented or sold, et cetera. That's probably like the out that I could see that would potentially make sense. But could you get it at a number that makes it worth your time and effort?
Yeah. Yeah. Well, so John, you asked a question before how you can have these conversations with the seller. Well, you can be a lot more direct with the broker. This is with the broker, right?
Yeah.
Okay. So you can go over with the broker. Like if you want to create an LOI that just says I'm buying for $300,000 for the entire thing, you just can't send that to the broker because they're just going to delete it.
Yeah.
So you can create the LOI and then you call the broker and then tell them, hey, I'm getting ready to send the LOI and this is it. And just listen to me. Don't judge what I'm about ready to say.
Mm-hmm.
Okay. Because I'm going to go over justification. And anybody else looking at this deal that's got any semblance of intelligence is going to offer you the same thing or just completely walk away. And you say, I'm going to offer you $300,000 for the business and the real estate, and here's why. And then share your screen and go over all this shit.
Mm-hmm.
Right? I mean, we've had declining sales for 4 years. He's got $250,000 for the outstanding loans. I don't think the company's ever made any money. Right? And just go over this stuff. I'm here willing to buy this. And just says like, hey, I sent this to my CPA. He thinks you're bankrupt in 6 months. And then what are you going to do when you're bankrupt? Right? Where's my
Well, it's a good example of the difference between an asset sale and a stock sale.
in what way?
Well, you certainly wouldn't want to buy this as a stock sale and take on all that liability, which
Oh yeah, I mean,
a anchor around your neck.
you're very rarely going to do a stock sale, but that's a good point. And let me get back to that in a second. Where's my credit card debt? Where did that go?
Doesn't say much for the broker.
There it
either.
is. You know, one more thing you mentioned, Jeff, is like he's got $55,000 of personal credit card debt. Right? He's living well beyond his means. The company may not file bankruptcy in 6 months, but he probably will. Right? And then he's going to walk away with nothing. I'm giving you $300,000 now, and it's got to be in the next 30 days. Sales are to continue to decline. I can't take this over in 6 months. You can't come chasing me down in 6 months. Okay, we're ready to sell. We're at wit's end, and we're about ready to close the doors. Well, no, I'm not going to do it. I'll just wait and buy this shit on pennies on the dollar in bankruptcy court. But Paul, you're the one that asked about stock purchases. Was that you, Paul, or who asked that?
Yeah, I was just making the point that, you can do a stock purchase here for whatever assets he may have that have any value, but you certainly would not want to do a stock purchase, where you're buying the actual LLC, because it comes along with all that debt, which you don't want anything to do with.
Right. So the only time you're going to do a stock purchase is if there's licenses or something weird that will not transfer to a new owner. That's it. So 98% of the deals you will buy, I haven't done a stock purchase yet. 98% of the deals you will do are going to be asset purchases. So for the very reason what Paul said is if you're stock purchase, you're buying his company and you're assuming any and all liabilities from the first day that business owner opened until they sold it. So this is a physical therapy company. So what if one of the therapists injured somebody 4 years ago and they just bring a lawsuit now? You're going to get sued because you just bought the stock, right? So if you bought the assets, you're just buying the customer list and all that sort of stuff. And you're not buying any liabilities, known or unknown. So again, and even if you do a stock purchase, what you would do, let's say you buy this company for $1 million and it's a stock purchase. So to protect yourself for any unknown things that are in the closet, $200,000 or whatever number you want to come up with is held in escrow for 24 months to protect yourself from stuff like that you don't even know about. Okay. And then apples to apples, $1 million asset purchase, I'm probably going to buy a stock purchase $800,000 on top of $200,000 in escrow, just because you're assuming that risk, right? The other bad thing about a stock purchase versus an asset purchase, it may be okay in some circumstances, but let's just say you're buying a distribution company for $2 million and they have $600,000 of vans and trucks that you're buying. Under an asset purchase, I actually buy those trucks. Part of my allocation of my purchase price is $600,000 for those trucks, which, by the way, you're actually buying them. And if there's 20 of them, guess what you got to do? You got to go down individually to your state comptroller's office or county tax office, and you got to transfer title on every single one of them and pay sales tax on every single one of them. So I'm in Texas. So if I bought $600,000 worth of trucks, I'm going to owe close to $40,000 within 2 weeks when I transfer those titles.
That's under a asset purchase?
They're an asset purchase. Okay. So those are the things you got to, again, that's why you're here. There's 10,000 things that you got to think about. So if you just bought that company and you didn't think in your working capital calculation, you didn't put 40 grand for sales tax for the trucks, you're going to miss payroll. A month and a half in, you're going to miss payroll. But hopefully I catch that for you, right? So back to what I'm saying is, so under an asset purchase, why I like it, because if there's a bunch of assets like that, and I don't even know what cars are. All assets have depreciation schedules and lives. Come on. Depreciation lives. I know I misspelled depreciation. 3-year property, tools, certain horses. A horse has 3 year. It's a 3-year property. So you buy a horse, you get to depreciate it for 3 years. By the way, I did not know that. So therefore, I am a lot smarter than I was this morning. Automobiles, 5 years. Okay, that's what I wanted to know. Okay, 5 years. Back to here. So 5 years. So it's $600,000. Let's say it's $500,000. So I can do the math in my head. So I get to redepreciate those assets because I just bought them. I paid 500 grand for them, 5-year property. So it's $100,000 a month or 100,000 a year. I get to depreciate versus a stock sale is you're buying the stock and you paid $1 million for that stock. And that's all going to be goodwill. And you're going to amortize the $1 million over 15 years. Which is what? Is that $75,000? You know what that is. 1 million divided by 66,000. So if I did a stock purchase or asset purchase, I get to reappreciate those trucks on top of any other assets that I have and their depreciable lives. Anything left over is going to be the goodwill. So I always want to minimize my taxes in the current year. Kick the tax can down the road. Always. So an asset purchase is going to give you better tax deductions. And it's not even close compared to a stock. So again, that's the $1 million versus the 800,000 on top of 200,000 in escrow to cover your nut and your liability, right? Does that make sense? It gets very confusing. And a lot of people don't take into account taxes on when they're buying something, how they set it up, how they pay themselves, all that sort of stuff. Super, 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 super important. Make sure you find a CPA that is a consultant. They're few and far between. Can save you a lot of money versus just an undertaker and doing your taxes and doing your books.
How do you find someone like that?
Interviews, ask the right questions. I can probably come up with something. You probably just say, "Hey, I can probably come up with like 3 or 4 or 5 scenarios." Let me write this down. I can probably come up with something, and then see how they respond.
Yeah, I have an accountant that has done my personal taxes for years, and he does my business taxes for my C corp now. But I honestly I have no idea whether he's a wizard, he's brilliant, he's out of his depth, because I'm out of my depth. I don't know what questions to ask.
Okay, I made a note. So, for example, it helps. Like, is mine a consultant? I think mine's kind of an order taker, but because of my knowledge of taxes and being a CPA, I kind of turn him into a consultant.
Yeah.
So I know just enough about this space to be dangerous that I can ask intelligent questions.
Hmm.
And that's what kind of, if you go through my 65 training videos, that's what I'm trying to get you to do on, let's talk about sales taxes for 5 minutes. So that's an 8-minute video on there.
I watched
And
that
I'm
one.
educating you just enough on sales taxes so you can ask intelligent questions. I'm not trying to get you to do your own sales taxes. I'm getting you to ask intelligent questions. So, for example, a question that I asked a long time ago that I didn't know if we could do or not was, I have a partner. One of them had 3 partners. Me and 2 of my brothers were on a deal together. And one of the brothers was the main partner, and me and my other brother Bob were 19% owners, so we didn't have to guarantee the note. But we had a bunch of write-offs that first year, and the company had a loss. First year coming out of the gate. So my one brother, who was the majority owner, didn't have any additional income. So he's going to, let's say it's $100,000 loss. So he's going to get a $60,000 loss on his K1, and he has no income to offset it. So I asked my CPA, so this was 20 years ago, can we allocate or reallocate the income to the other partners on a year-to-year basis? He said yes. All it is a board meeting and a board vote. So if you look on a K1, it has your equity ownership percentage and profit and loss percentage, and they can be different. And if they couldn't be different, then why would they have 2 different boxes for it? Right? You could give, somebody could have 0% equity and you give them 10% of the profit and loss. Right? You can have partners that don't absorb any losses. All they get is gains. So what we did is, since me and my other brother had income from other companies, so my brother Vince, who didn't have any additional money, we gave him 0% of the profit and loss, even though it still showed 60% equity. And me and my brother Bob took 50% of the loss each. And now we can allocate that against our other income. So if you know just enough, you can turn your order taker into a consultant. Ask them questions, right? So going through this, and there's 10 or 15 videos on taxes. You guys got to watch that shit. It'll save you hundreds of thousands of dollars. Those videos are really important. Okay. Or the other thing I did, me and my partner on my pipeline company, we don't have health insurance. So I asked him if we could just do a $1,500 a month allowance to cover any health related expenses, and that to be a write-off. So instead of me paying him personally, or the business paying for him, or us providing health insurance, we just pay each other $1,500 a month, and it's a business write-off. And we use that extra expenses to help pay for our medical expenses out of pocket. So some of the stuff that I do on taxes, I guarantee nobody else does. And all of it illegal, all of it highly legal. So there's no problems with any of that stuff. So you just got to ask the right questions. But ideally, is you would get somebody that's a consultant that would tell you, let's say you set up your LLC and your tax as a partnership. Hopefully that your CPA that you have, after having them a year, you just ask a question. It's like, hey, is there anything that I can do differently to save on taxes? And hopefully they say yes. Okay, well, what is it? Well, let's reclassify your LLC and be taxed as an S corp. That'll save you 3 or 4% a year in taxes right there. It'll take you about 18 months to get it reclassified, and all it is one little page. So it's super simple to do. And then you might say, I was like, hey, you got any children under age 18? Yeah, let's start paying them up to $15,000 a year, and it's going to be tax free on both sides to work in the business, right? So there's just all sorts of stuff in there. So you just got to ask questions. And I got 2 more deals to go over. We could go over both of them on, if we don't have any questions on Wednesday, I can throw both of those up here because they're both actually Heidi's, and Heidi's not here today. At least I don't think she is. So I'd like to go over those when she's here. So if she's here on Wednesday, then we'll go over both of her deals and we'll go through them fast, 30 minutes each. If she's not here, then I'll just do all Q&A on Wednesday. It's 8 o'clock. What else we got before I go? And welcome to all the new guys. Appreciate you guys being here.
Could you confirm your email address again, Paul?
Okay, I'll throw it in the chat here. In the chat. It's just Paul at bizbypro.com. What are the questions before we go? Who's watching all the World Cup games, by the way?
Oh, yes.
Yeah. It's because I work from the house. So I'll just like, all right, I'm done for 20 minutes. I'll go in the living room and watch soccer for 20 minutes and then get back to work.
Dude, a lot of highlights today again. It was another messy day.
No, I missed the entire thing. I turned it on with like 3 minutes to go, and I missed his second goal by like 30 seconds. So, yeah, it's fun. I'm gonna miss the entire U.S. game Thursday because it's 9 p.m. Central, and I got another webinar I'm doing on Thursday, so I'm missing the entire game. But at least it doesn't mean anything. They're probably going to play a lot of scrubs and subs, and because they've already won their group, so it doesn't do anything. So they'll probably have 6 or 7 new players because 4 guys have yellow cards, and they get another yellow inside the opening round. They miss the next game.
Mhm.
So those 4 guys will definitely sit.
Yeah.
And then I don't know, does Pulisic come back and play for a half to make sure he's ready to go? But yeah, it'll be 6 scrubs playing. So I don't know if I really care if I'm missing it anyway. So it's kind of fun. Yeah. Anything else? Cool. I hope this was beneficial to everybody. We go over some weird shit on here, so they're actually kind of cool.
And I'll keep the group posted on this one as the story continues.
Okay. Yeah. Keep us updated. Appreciate it. All right. See you guys.
All right, thank you.
Okay. Bye.
Thanks. Bye-bye.